We are going through now the Apple results, and the trading that stock has now resumed in the post market, and it is up about 5% right now. $423 is where I'm seeing the trade in the aftermarket, I should really say, where Apple is, and we'll see how it trades through through the sessions around at the different exchanges until we get back into the U.S. markets. Colin Gillis back with us, John Erlichman, our Bloomberg senior West Coast correspondent. And you can expect that would be, the knee-jerk reaction to an announcement like this.
Again, right, the fact that June quarter number was scary. And the real question was that expected and baked in? Because analysts had not ratcheted their numbers down enough. And the market is saying yes. Now, we got to be a little, I don't think you're going to see Apple trade in the 300s again, for quite some time, particularly with the size of this buyback. Our thesis is still intact. You've got the Developers Conference coming up in June. That'll be a nice catalyst. You've got a new phone coming, a new iPad coming in this September. The only thing I would caution is, as it gets closer to 500, we're going to start to revisit where we're at. That's our price target. Don't expect this stock to return to the 700 levels of the past. The market is changing.
John, how unusual is it that the shares were halted for this amount of time during this report?
It's a good question. Off the top of my head, I can't remember how often they do that, but clearly, the minute I saw that, I said, okay, they're making a cash announcement, because obviously when you've got material information to share, then there's the need for a halt. A lot of times when there is an earnings release, they don't always see the need for a halt.
Yeah.
But, here is a company, you were talking with Colin about the fact that they'll have their developers conference not too long from now. This company is quite confident in its products. They feel pretty good about them. Tim Cook says it all the time. He talks about the product pipeline. Even though we want them to tell us what they're making next, now, they don't want to tell us that, but they do feel confident about it. But what you have seen over the last 8 months is a deterioration in confidence on what those products are. And so as the stock market makes its vote, Apple basically says, okay, well, we can address the stock issue by buying back a lot of stock, and we're still confident in our product strategy. So it becomes so much of a stock story today. And Tim Cook, a guy who's willing to address the stock price at the annual meeting, and clearly today he's going to be getting a lot of questions from the analysts about this specific decision and that wording that we highlighted earlier, the fact that they believe so strongly in their business that they're going to use the bulk of this money as part of this bigger plan of returning in the neighborhood of $100 billion to shareholders as part of a stock buyback, because they feel good about the product plan, but they are a secretive company and they don't want to say too much about it. And the problem is that people haven't been able to gauge where that means the company's going.
Final thoughts here, Colin. Again, just reiterate, because it really boils down to, on the one hand, revenue guidance being lowered by 12% versus a 17% increase in the buyback.
Correct, right? And that clearly the return of capital is the driver, plus the strong performance of the March quarter results itself, right? You always have to look at actual performance and not worry as much about guidance, because the company does have a history of doing well against its own guidance benchmark. But, the final thought before I jump on the earnings call is, it's nice to see an American success story, bounce back and do well.